such an interesting day, and this is only the first day of a week. I think will be a week to remember. Stay with me all the way through this video because we got stuff right to the end that I think you're going to want to see. So let's start off with Andrej Karpathy is enthusiastic about the Apple announcements today, even if the market wasn't so much. He says that we are quickly heading into a world where you can open up your phone and just say stuff. This is him, I'm quoting him. It talks back and it knows you, and it just works. Super exciting news as a user, I'm looking forward to it. Well, so far, quite frankly, Siri kind of promised something like that a very long time ago. And ChatGPT, sometimes, not so much. 𝐓𝐞, pretty good, but also I've asked the questions even recently that the answer was not that useful. Anyway, what Elon responded was he wanted to know if you can ever just turn it off, or is that impossible? You just can't turn it off. Well, I did a video a little while ago. If you haven't seen it yet, thousands and thousands have seen it, where Elon says that he might have to ban the use of Apple devices at all of his factories if, in fact, the Apple ChatGPT situation is such that everything is embedded and that you cannot turn it off, and therefore ChatGPT gets access to your data. Well, okay, my take is this right now. Elon listened to Andrej to a certain extent. This is exactly what we want the car and Optimus to do. And the sooner the better. And you can certainly build in any kind of limiter for the consumer. Please put in the safety devices. Please keep it from the data from being able to be used inappropriately. But we do want the car to know us and understand us, and we want the bot to know us and understand us even more than the car. And of course, Tesla, I know you'll do this in such a way as to keep our privacy protected, and also letting us turn off certain apps if we don't want that information to be part of the whole milieu of what's taking place. But as we noted earlier today, Elon is threatening to ban all Apple devices as of this time. So Mario Nafal says this. He says, here's the scoop on Apple Intelligence. Apple has basically embedded OpenAI, ChatGPT, into every single Apple device and Apple apps, and it scrapes up all of your personal information and data. But, and then it retrieves and analyzes your personal data across all your devices. That's according to the worldwide conference that they're holding today. So then Elon says, I don't think this survey, Elon, he responded with an exclamation point, meaning he didn't like that they would be scraping your data. All right, so that's where the story stands right now. Again, look at the previous thing that I did earlier if you'd like to see the details of what Elon's thinking about, but this pretty much covers all of that. All right, this is from AAA, and I don't think this survey is particularly accurate, and that's not because of any bias on my part, but because there's multiple other surveys who have come to a much different conclusion than AAA, but I think they're a reputable company, and I think we should look at it. So they surveyed consumers about their attitudes toward electric vehicles. They did it in 22, and then they've just done it again. In 2022, 25% they were likely or very likely to consider an EV for the next car. Last year, 23% said the same. But then this year, it dropped to only 18%. So my suggestion would be if you get that kind of a drop in 1 year from a consumer survey like this, you've done something wrong. I was a psychology major with an emphasis in sociology, and I took statistics, and I've done my own sociological studies and had to analyze those. Yeah, if you got a drop like that in a single year on something like this, I think you need to go back and ask the question in a new way. Something wrong there. It says there may be a near-term ceiling related to consumer adoption of battery electric vehicles due to their cost, charging accessibility, and range anxiety. This is what the people obviously have been saying all along. They surveyed 1,152 adults, selected to represent about 97% of the U.S. population, and the survey had a margin of error of 4%. Well, okay, 4%, that if you get 4%, you could drop that down, get awfully close to last year's number. What's causing fewer Americans to consider electric car? The answers won't surprise you. Cost, lack of convenient charging options, and range anxiety. Of course, you and I have talked about that over and over and over again. The costs are coming down, and people don't understand where the costs really are. Convenient charging options is only a problem for the other cars other than Tesla. And then range anxiety, most people will never, ever, 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 maybe once a month, they'll need to charge up their car at other than a home charger. Now, there was one, 31%, they were open to a hybrid vehicle instead of trying to go all the way. They also cited a problem with not being able to charge at home because, you know, they're apartment owners or whatever. And they're saying practicality, cost, convenience, ownership experience. And so that's where we really are right now. All right, let's switch subjects here to the vote on Thursday. So major stockholder Gifford backs the pay package. So he's got a big slug of shares, and he has said he's in. He's going for it. Meanwhile, Bernstein Saganacci thinks the vote will fail. Now, you know, Saganacci, if you follow him at all, or if you've listened to this channel, you know that he's a Tesla bear. He's going to always think negatively. He's got a price target, I think, of around 110, 120. Anyway, the article really, the first article I read didn't show that he'd done any kind of a deep dive at all. It's kind of an off the top of his head kind of thing. But then Barron's goes into a little more depth about the whole story. So he believes that institutional investors who control 25% of the vote will follow the no vote recommendations of proxy advisors ISS and Glass Lewis. Of course, there were other proxy advisors. Anyway, and both of them had also advised no back in 18. By his math, with 25% no votes, well, okay, what are the odds that 100% of all the institutional investors are going to vote no? Or did he mean that 25% of the shares outstanding that are the voting shares would be no from institutional investors out of the total of 100%? I just don't know. But for him to think that 100% of the institutional investors would vote no, that makes no sense. We know some that are voting yes. Anyway, Saganacci also says he sees shares slipping more than 5% if the final vote is no. He rates Tesla stock as sell. Oh, there he is. He has a $120 price target. I hit that on the nose. This might understate the move. Options markets imply Tesla stock will move about 7% up or down following the vote. Options markets also imply that the drop will likely be more severe than the gain. So why did they say that the move will be about 7% up or down following the vote, and then say it's more severe one way or the other? Well, anyway, of course, that makes sense. Aside from Saganacci, most analysts have said that vote will probably pass, which means some vote optimism is embedded in the shares. So I thought so too until today, and the stock went down today. I was thinking it would be up today, or maybe at least up later this week. I certainly didn't expect it to be down in an up market today. So I'm wondering if people are reading these articles and they're starting to get nervous and are trying to give themselves a hedge, or, you know, take a little off the table, or sell off until after the vote because they're afraid it's going to go too negative. Because I think there's a chance that it goes worse if it's a no than it will go up if it's a yes. All right. Technical analyst Frank Capillari of Cap Thesis and Katie Stockton of Fair Lead Strategies both point out the Tesla stock has been hovering near the 50-day moving average. A move below that price level brings 150 into play, or roughly $25 below recent trades. That level probably represents maximum pain for investors in the no vote scenario. So 150 would be worst case theory. One interested, she doesn't give they don't give the upside. One interested party thinks getting the pay package approved isn't as difficult as Saganacci believes. Musk tweeted Saturday that roughly 90% of retail shareholders had voted in favor, And that would be significant because about 45% of the shares available for trading that aren't held by insiders, Musk and his brother, are held by retail. So, but unfortunately, then they go on to make this conclusion, which is incorrect. If Musk's tally is correct, only about 1 in 5 institutional votes would have to be in favor for him to get his compensation package. You cannot make that claim because you don't know what percentage of the retail investors are voting. So how do they make these? How does this get past? How does this get past an editor? It's just math, guys. Come on now. You have to know what percent are voting. If the institutional voters are voting 100% and the retail investors are only voting 70% of the time, then that's going to throw all of your numbers off. So sorry, wrong. However, the directionality of what they're saying is true. The directionality is if it's true that 90% are voting and that a large block are voting, then it makes it pretty easy for the institutionals to get to where they need to get the rest of the way. It's a question now of how the institutional votes will shake out. CalPERS and Norway's sovereign wealth fund are against the deal, but Baron Capital and ARK Invest are both big holders. There are vocal shareholders and analysts on both sides. 𝐓𝐞𝐬𝐿's prediction for a no vote is countered by Morgan Stanley analyst Adam Jones, who sees a yes. Jones says survey clients expected a yes vote by a 2-to-1 ratio. We saw that article last week. Now, with regard to 𝐓𝐞𝐬𝐿 versus Adam Jonas, which one do you think's been more right about Tesla and kind of things in general over the years? Jonas rates Tesla stock a buy with a 310 price target. Dan Ives also has a buy rating at a 275 price target. Ives wrote this past week that a yes vote is more likely. The issue has been an overhang on Tesla stock, and this will be important to move the distraction, put it in the rear view mirror, but it won't totally, and they should say that. Overhang, it won't be totally in the rear view mirror because it still has to go through the Chancellery Court. Overhang might be an understatement. If the package is voted down, the board would have to figure out a new way to compensate Musk, and shareholders would have to vote on a CEO compensation all over again. More importantly, Musk's reaction to a no vote can't be predicted. I don't think anything will happen this Thursday. If it was a no vote, I don't think he says anything this Thursday, because then you have to go to plan B. Pretty good likelihood that I also, though, blew it. As I mentioned just a few minutes ago, I thought people would be possibly, taking the risk in terms of betting which way things are going to go this Thursday. They might have been betting on a positive and therefore bidding the stock up as we get closer. At least for today, that was the opposite. Tuesday, Wednesday, and Thursday before the vote, it's going to be hard to tell how people might be betting on the Thursday outcome because there's so much other noise with the CPI, PPI, the Fed, everything else is going on those 3 days. And tomorrow morning, well, I'll talk about tomorrow morning in a minute. Hang in here. Remember, there's so much more to come. This is Randy Kirk. You know what you have to do. Hit that like button and the subscribe button and then also, the notify button. Tomorrow morning, I do have, the morning after the bell, where we talk about all the things that happen, up until about 7:15, 7:30, something like that. And then that one comes on, it comes live somewhere between 7:30 and 8. And tomorrow morning, though, we'll be digging deeply into the National Federation of Independent Business report, which is a long one, and which I'll get up a little extra early so I can go really deep because I think it's an important one. We'll talk more about that in a second. Now, in the meantime, the Fed has a New York, we have the New York Fed, you got 12 different offices around the country. The New York Fed does a survey that came out this afternoon, might shed some light on what consumers are thinking. Americans, it says, are bracing for a high inflation to stick around for the next few years, according to a key Federal Reserve Bank of New York survey. The median expectation is that inflation rate will be up to 3.2 a year from now. This is according to Federal Reserve survey of consumer expectations. That's down 0.1% from 3.2 that was recorded the last April. In April. In April. Anyway, but consumers anticipate that inflation will remain high in the coming years. The 3-year ahead expectation held steady at 2.8, while the 5-year was still 3.0, up from 2.8. That remains above, way above, of course, the Fed's 2% target, indicating that inflation could be here to stay. By comparison, central bank policymakers projected in their last economic forecast that inflation will fall to 2.1 by the end of 2025 and eventually settle at 2.0 in 2026. What nonsense. They're going to hit it exactly. Yeah, they're going to do that. That's happened so many times in history. Okay, never. For like 10 years, it was at 0. They kept trying to get it up to 2. Then they tried to get and say, oh, it's at 0. We got to get it up to 2. And then all of a sudden it went to 9. And then now they're trying to get it back down to 2. So when does it hit 2%? Can you remember the last time that inflation was 2%? No, neither can I. While Americans think that inflation will decline slightly over the next year, they expect the cost of necessities such as gas, food, and rent will be unchanged. They think it'll be unchanged? I wish I knew more about that. I always like to see the real stats. They're also anticipating a sharp 0.1% rise in the price of medical care to 9.1. I'm sorry, did I say a sharp? I had my cursor in the way. They're expecting a 0.4% rise in the price of medical care to 9.1% year over year, and a 0.6% drop in the cost of college to 8.4. Those numbers don't comport with anything I've seen. I don't know. I'm sorry. I should have maybe looked those up. They make no sense to me. This is a survey based on a rotating panel of 1,300 households, and it helps the Fed decide what to do. This is because actual inflation depends at least in part on what consumers think it will be. It's sort of a self-fulfilling prophecy. If everyone expects prices to rise by 3% in 1 year, that signals to businesses that they can increase prices by 3%. Workers, in turn, will want a 3+% pay raise to offset the rising costs. Fed Chair Jerome Powell has repeatedly stressed that policymakers are committed to the 2%. Speaking during a panel discussion in mid-May, Powell said that recent inflation figures, which came in higher than expected during the first 3 months of the year, suggest it will be taking longer than previously thought to attain the confidence that we're back to 2%. We don't expect this to be a smooth transition. Yes. The mean perceived probability of losing one's job in the next 12 months tumbled by 2.7% to 12.4, dropping below the 12-month average of 13.2. So I guess it was all the way up to 15.1 was the chance of losing your job. It averages around 13.2 over the last 12 months. Right now, people think there's a 12.4% chance they're going to lose their job, which is still a positive number. It's a good thing. The mean perceived probability of finding a job rose to 52.2 in May. And that was up from a 3-year low last month. But again, they don't tell you what that low was. Okay, where are the markets now as we go into NFIB day tomorrow? And really, the NFIB thing is really the one we should be paying attention to. I'm sure that the Fed does, although I can't remember they've ever mentioned it. All right, let's go ahead and look here. We have got, let's start with what's happening with Tesla, the markets. All right, the equity market. So the Dow Jones was up 69 today. NASDAQ was up 59 today. The S&P up 13 today. And Tesla down $3.69. Magnificent Seven was mostly up except for Apple, who was down $3.77. NVIDIA, who split today, did not get any advantage from the 10-to-1 split. They were only up 90 cents at 121.79. All right. And then you've got the Cathie Woods were mixed, but very light, right in the, like not much movement in any of them. Not any of them. There's about 8 that I follow. All right, let's go ahead and go in and look at the the bonds. We have got the 10-year. This is in the pre-market now. You've got the pre-market on the 10-year is down 0.4 basis point, sitting at 44.65. You got the 2-year unchanged, and you got the 2-month up 1.4 basis points. Let's see, did it get back over 100? No, you're still looking at less than 100 basis points between the 2-month and the 10-year, but you're still looking at that 40-something on the 2-month. All right, the 2-year. Let's look at oil. Last look I looked at was still going up. We've got oil continuing up. Texas Intermediate is now at 78, up 31 cents. Brent unchanged in the the pre-market, sitting at 81.63. Natural gas, there's just no holding natural gas back. Up 3.58% at $3.01, busting through $3. All right, we got gold down just a teeny tiny bit, call it 𝐓𝐞𝐬𝐥, and that would be at 23.27. That is a little bit towards the lower end of its recent range. You've got silver coming down just a bit, 1.16% in the pre-market, and copper up just barely, again, call it 𝐓𝐿 at $4.54. You've got the dollar is kind of all over the place. The euro, as you probably well know by this point, if you're reading any news at all, you've got Europe is going to the right, is moving to the right pretty much everywhere across the continent right now. Eastern Europe, France, Germany, England, it's all going towards the conservative side. And of course, that's shaking things up over there, and including even the European Union, because some of the right-wing organizations that are winning in these countries, the parties that are winning in these countries, are not in favor of as much. They might not want to get out of the European Union, but they don't like how much control the European Union has. They'd like to have more of that control in the hands of the individual states within the European Union. And so that's causing a little bit of a shakeup in things over there. And so the dollar is up against many of those currencies, up against the Japanese yen last time I looked. So in general, the dollar is doing well right now. Then you've got the Bitcoin is down just a tiny bit, 261, sitting again, 69.45, under 70,000. You got the pre-market on the equities. You got the Dow down 57, or 0.15%. You've got the S&P down 6, or 0.11%. And you got the NASDAQ down 31, or down 0.16%. So all three of those kind of in the same general directions, same amount, a little over 0.1.5%. All right, so a little directionality there, potentially suggesting a soft opening tomorrow morning. Yeah, so let me just say again, I had a great conversation with Brian White earlier today. I will put that card up there if you missed it. You're also definitely going to want to come around tomorrow morning for that NFIB report. Small business people are the #1 engine of the economy, not the Mag 7, not the S&P 500, not the Dow, not the Russell 500, not any of those things, not the NASDAQ. None of those are the engine of the economy. It's the small business people. And this survey is excellent. And as you know, if you follow this channel, I dig into it very deeply every month, because you get the whole report, you get to see all the stats, and you can decide for yourself what they mean. I will, of course, decide what I report, but I will try to give it to you as straight up as I can, because I'm very interested in what the small business people are thinking. What are they thinking about inflation? What are they thinking about the job market right now? What are they thinking about pricing, their own pricing? Are they able to pass prices through? How do they feel about their future? Are they looking for better profits in the next few months, or are they hunching down? How is their ability to borrow right now? Are they able to get loans? Do they need loans? How do they feel about that? All of that stuff will be covered tomorrow morning on the show. So hit that notify button so that you don't miss it in the morning. And as always, it has been amazing talking to you.